All right, for more insight on oil's recent volatility, we're joined by Carl Larry. He is the Oil and Gas Director for Frost and Sullivan, a consulting company. Carl, good to see you.
Good to see you, Michelle. Thank you.
Carl, there was talk this week that Russia, a major non-OPEC producer, may cooperate with the Organization of Petroleum Exporting Countries, OPEC, on some production curbs. Now, this could be a big breakthrough because Russia has been refusing to do this for 15 years, and the Saudis have said that the condition for a coordinated cut would only be one where the entire cartel and non-OPEC players like Russia would need to join in. Now, this did happen before in 1986 and 98. So, Carl, how likely is it that this could happen again now?
Well, Michelle, it's likely it could happen. There's a lot of pressure on these countries within OPEC. There's a lot of pressure on countries like Russia. But the one X factor here that really throws a wrench into it all is that the U.S. can export now. And so if you deal with Russia and OPEC, the U.S. has to come in, and chime in too, and just kind of figure out a way that we're not going to export ahead of them.
Absolutely right. The U.S. able to export crude for the first time in 40 years. But before we bring that into play, let's focus on Iran, because Iran is saying at the same time that it would not participate in a possible deal between OPEC and other producing countries to reduce output. So, I mean, do we even have any kind of functioning cartel at this point?
No, it's more of a placeholder name than anything. There's a lot of infighting, and it's between Iran, it's between the Venezuelans, it's between Nigeria. There's a lot of issues that are going on within OPEC that just really make it more of a fractured cartel right now, and really just a name for anything. So we'll wait and see what happens. But Iran has a very good point. They haven't been able to really sell any of their oil for the past few years because of sanctions, and so they'll want to make up some ground here. It's going to be hard to see them pulling back, even if they have any kind of production cuts.
Well, yes, Iran's certainly wanting to get back into the game. And Carl, as you mentioned, the U.S. is now able to export crude now that that 40-year ban has been lifted. It's already exporting to Europe. What is the significance of this?
Well, there's this idea that we can export now, but when you talk about cutting back production quotas, like for OPEC or Russia, it's easy because they own the country owns the oil production. Here in America, anybody can really export oil if they're producing it, and having to ask us to try and curb that is going to be kind of tough. So it's going to be interesting to see how that plays out. If there is some production cuts over there, they'll want us to cut back also, but there's not really much we can do as a government to stop that from happening.
So what does this mean for oil prices, Carl? How much further down can they go?
I think we've kind of found a bottom here. I think this $30 level is kind of where we saw the most of the selling action. We saw it go down to 28. I think that a lot of speculation's out of the market now, and I think the fundamentals are coming back. So I think the low's in, but I don't think that the high is going to be that much greater. I think maybe we get back to $50 by the end of the year, but I think more likely we'll probably see a range around 42 to 46.
Well, can Saudi Arabia hold out much longer? I mean, they've been the big factor here in maintaining their position, but they're starting to feel the squeeze a little too now, aren't they?
They are. There's a lot of money that goes on in that budget, and social reforms are a big part of that budget. So even if oil prices did get back to $45 for Brent or for WTI, it's still going to be hard for them to continue going forward, budgeting around that kind of oil. So I think it's something that they're really going to have to blink on first. They're going to have to really make some moves here to kind of cut back that production to support the prices, but it's still going to be a struggle going forward for that budget.
But Carl, with Iran joining the oil game and the U.S. now exporting crude, what could send oil back up to that $45 level that you're mentioning?
Well, it's going to be economic growth. I think that if you see any kind of production cuts that could happen here, it's just going to be a little bit of a pause in that production, because we're going to have to see that the global economies pick up. Europe's trying to do a lot here, pick up their stimulus. Bank of Japan today cut back and trying to increase their stimulus. China, if they can do the same, we might see the global economy pick back up. Once that picks back up, we'll see it back in the 40s, and I think that'll be fine. Anything above that, though, we'll probably have to take some kind of major shakeup.
All right, well, while the global growth is still a very big concern, Carl, very quickly, energy companies are hurting, but the airline industry has really been benefiting from the plunge in fuel prices. 2015, the most profitable year for the airline industry since '78. So when are we going to see those lower oil costs passed down onto consumers and get some cheaper flights?
Well, you know, it's a struggle. I think that we've seen the same thing happen with diesel prices back in the late 2000s. Is that even though as the prices go down, it's hard for these companies to give up that little bit of extra that they're making. I think we can see some reduction in this next quarter on flights for those airlines with lower fuel costs, but it's still going to be minimal. It won't be anything that we'll recognize and say this is a great deal.
All right, alas, we'll leave it there. Thank you so much. As always, Carl Larry, Oil and Gas Director for consulting company Frost and Sullivan.